What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we continue to close slightly higher and we are still above critical support levels. Are the bulls running out of gas or are they getting ready to push for that next leg higher? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, first up I want to thank each and every one of you that are smashing that like button because we reached 2,000 likes yet again, so that's 2 videos in a row. So let's keep the trend going and let's hit another 2,000 likes tonight. I love to see that you're all loving these updates and I'm really enjoying seeing all of the comments on how you're staying on the right side of the trade and not letting fear drive your trade plan. I know a lot of you are starting to understand how important it is to follow price action and trend, and that is exactly why I'm here doing this, because I want you all to learn how important it is to follow the chart and not let biases get in the way of your trading. Alright, so on SPY, I did say last night that we were likely setting up bear trap round number 7, and as you can tell from today's price action, we did bounce off that support and we did hold back over the 5 EMA. So looking at price action and trend, we are still bullish and there is no reason to believe that we're going to roll over and die until the price action closes below support. So without a doubt, the bulls are definitely resting and the bulls are trying to lure bears in so that they can go battle the big brain bear up there at SPY levels of 435 because they want to recruit as many bears as possible so that they end up getting short squeezed through resistance. So I continue to caution you not to fall for bear traps. It is only going to be bearish once SPY breaks and closes below support and not any sooner than that, so you need to be very objective and follow price action here. I do have the arrow drawn to the downside because a pullback is getting more and more likely, but I cannot stress it enough that we are not going to see a pullback until we close below our support trend line. So a lot of traders like to try to predict what's going to happen and they try to front run the next move, and that is where a lot of traders are going to get burned in this bull trend. If you're looking ahead and you're just assuming we need to pull back because we've gone too far too fast and there's no way we can go any higher, I'm telling you that is a very rookie mistake. Wait for the price action to break below this support trend line and then we will likely start the pullback. I'll give you one scenario that is very possible from here. It's that we bounce off this support and go straight up to SPY 435, which is going to trigger a short squeeze because that will be a break of resistance. And there are going to be a lot of short sellers with their stop loss just waiting up there just in case the price action breaks out. And they're eventually going to get short squeezed, which is going to lead a massive amount of buying above resistance. And they are going to help drive SPY higher. That is what I tell you why the bulls are recruiting bears to short squeeze through resistance. Because on a break of resistance, those bears are instantly liquidated and then become net buyers, which drives price higher. So I'm telling you this so that you're not part of that crowd getting short squeezed because I want you to be well informed and I don't want you losing money unnecessarily. So wait until we break below support before you start getting bearish. Or if you are a bull, you are now setting a risk on SPY on a break below 427. Remember, I want you to keep upping your risk levels each and every day because that way it guarantees you lock in profit. And that way you are not holding the bag if this pullback becomes very deep. Get in the habit of managing risk and sizing your trades accordingly. And right now you just have to stay in the direction of the trend and ride the wave. Remember, you are retail traders and investor. You are not the ones moving the market. Your only job is to ride the wave and go along for the rides. Do not fight the trend because that is going to be the most difficult thing you can do in the stock market. And right now, the trend is very obviously bullish. If you're having trouble seeing the trend, just take a picture of the chart on the screen, print it out, and show it to any child that is 5 years or older, and they will tell you that this chart is moving higher. So do not overcomplicate it. Sometimes it's really as simple as you want it to be. And right now we are staying bullish as long as SPY is above 427. And I really don't know how it gets any simpler than that. If SPY breaks below 427, we'll be looking for the downside targets at 421, 416, and the gap close at 413. But keep in mind the 20 simple moving average is now crossing through the gap. So each and every day this bull trend is continuing to get stronger and critical support levels continue to rise higher. So just believe me when I tell you that price action and trend are the best way to trade this market because there is nothing in your fundamentals that is going to tell you this is a bull trend. The fundamentals look very bleak and right now the chart looks very bullish. And I will trade the chart because that is what pays me. It doesn't pay me to short a bull market, it pays me to go long in a bull market, and that is why I'm currently telling you to take long trades off support. The next critical resistance is going to be our resistance trend line at SPY 432, and on that bull breakout, it will be a very quick trip up to 435. So just follow the trend because the trend is your friend and it's the path of least resistance until we break down through support. On the NASDAQ 100 triple Qs, we were up 0.24%, and again, we continue to close well above support, and we're back over the 5 EMA because yesterday we did close barely below it. Critical support in the triple Qs is going to be right around 328, and our support trend line down here right around 324. And if we lose that critical support, you're instantly getting more risk off for the gap fill at 319. 319 is very critical support because we also have the 20 simple moving average there, and we still do have a very strong bull trend, so there will be buyers of the dip at support. The next likely upside resistance is a retest of 334, and if we start to break out above resistance, we are going to get a short squeeze that will likely take the triple Qs all the way up to 339, and you can see there is plenty of room in the upper Bollinger Bands to just get there in a hurry. So I do expect this to be a very impulsive ride higher, and if the bulls are still strong, which I do believe they are, I do expect to see the market gapping up tomorrow, which is going to lead to a very impulsive short squeeze. So we are very likely going to completely squeeze the bears out of this market in the very near future. We're instantly getting more risk off if we lose support, so do not forget about that risk level at 327 and 324. In the Dow Jones, we were up 0.11%, and the Dow Jones is building another bull flag right here at resistance at 341. And keep in mind, we already did close above that level one time, so the next close will be a bull breakout for a quick trip up to fill the gap at 347. Set your risk at support at 337 and 333 and get more risk off below 333 because we'll likely fill the gap at 329. But do keep in mind our 20 simple moving average is crossing through that gap, so there is a ton of support for the bulls, and this is still a very strong bull trend. On the Russell 2000 IWM ETF, we were up 0.66%, and as you can tell, we continue to find buyers at the support trend line, and we're closing back over the 5 EMA yet again today. Critical risk levels in IWM are going to be at 198 and 196, and below 196, look for the gap fill at 192 and a retest of support at 191. But we're not getting off this bull until we break the support trend line, and the next upside price targets will be 205 and then 207. On the ARKK ETF, we were down 1.1%, and as you can tell, the ARK ETF is retesting the critical support at $47, and this is do or die for this ETF because if it breaks below 47, it is not yet out of the bear market and it could still go for another leg lower. However, this is also your best risk reward setup because this is literally the level that defines the bull market in the ARK ETF. So if you're buying at this level, you could be catching what looks like a local bottom when you look in the rearview mirror, but you instantly need to get risk off if this level breaks down. Resistance from here will be at 49 and 52, and above 52 it will look like a bullish breakout for the next price target at 55.5. On the VIX, we were down 1.71%, and we continue to see the VIX getting crushed, and we continue to see the VIX closing below 20, and I continue to tell you this is bullish. The VIX is in a bear trend, closing below 20 and very likely trending down towards 18, which is going to go hand in hand with a bull market. We're not getting risk off and bearish until VIX closes all the way back above 24, and that is a long ways away. On Bitcoin, we're currently up 0.33%, and Bitcoin is still at that extremely critical support zone right around 23,000, and this could be the best buying opportunity in Bitcoin for who knows how long. Looking in the rearview mirror, we may look back and say these are some of the lowest prices Bitcoin's been in the last 3 years, or we could come all the way back down to 19,000, nobody knows for sure. But one thing I can tell you is this is still higher lows and higher highs with the next bull breakout just above 24,000. So as long as we hold support and start to bounce and break resistance, I am still bullish on Bitcoin for the price targets at 28,000 and 32,000. Your biggest risk is going to be a retest at 19,000, so just keep that in mind and be willing to buy more if we do go down that low. Continuing with our big tech hot stock names, we have Amazon up 0.14% today, still closing below the 5 EMA after getting rejected from 144, but still above critical support at 138, and the bull trend is only getting stronger and stronger as that 20 simple moving average continues to rise. As long as Amazon is above 138, it is still likely we're trending up towards 152, but you will need to get a little more risk off if we lose 138, even though our 20 simple moving average is all the way up here right around 136 now. So just stay bullish as long as we're above support and get a little more risk off as we get to resistance until we can get a decisive breakout. On Microsoft stock, we were down 0.39%, and Microsoft continues to close around this risk level and support at 290 with the next valid price target at the gap close at 296. On a break below 290, you're looking for support at 287 or the full gap close at 283. But as you can tell, we have very bullish price action and a very strong bull trend. So I do anticipate Microsoft to continue to trend higher. On Nvidia stock, we were up 2.39%, and Nvidia had a perfect bounce off support, which was that 20 simple moving average. And I continue to remind you, in a bull trend, there are going to be buyers at support, and that's exactly what you saw today. So buyers at 181 to 182 is incredibly bullish, and as you could tell, we did start to break out with the next critical breakout that's going to be above 191, and that should be just enough energy to get us up to resistance at 196. If we can break above 196, we'll likely start trending all the way back up to about 213, and your critical risk level and support is still down here right around 180 to 178. On Tesla stock, we were down 0.37%, and Tesla continues to close above this support zone right around 904 and still above all the moving averages and still in a bull trend. So there is nothing on Tesla that tells us we need to be bearish. Now I will caution you, it is possible that Tesla is going through a long consolidation before we get a bull breakout. So you will need to have patience until we get that bull breakout above 928. And then we could hit that price target at 970, which I do expect that to be a very strong resistance. So don't completely rule out the possibility that we're building some type of bull flag and consolidation wedge until we break above 928. Downside support levels need to be right around 900, and our 20 simple moving average is now at 875. So use those as your critical support levels. On Apple stock, we were down 0.23% today, and Apple continues to bash its head against the resistance trend line that defines the bear market. But as you can tell, Apple is clearly not in a bear market, and it's getting very close to flirting with brand new all-time highs. The bull breakout above 174 can take it to the next price target at 179, with downside critical support at 170, and below 170 you're looking for the gap fill at 166, and I do believe that's going to be very strong support if we do go fill that gap. So stay bullish as long as Apple is above 170, and get ready for the next price target at 179 once we get the bull breakout above 174. In the financials, we were up 0.11%, and we still have full bull price action and full bull trend. The industrials were up 0.4% today, and we still have the full bull price action and the very strong bull trend. The healthcare sector was down 0.44%, closing back down below the 5 EMA, but still holding up above the 20 simple moving average and still in the bull trend, with the next bull breakout above 134. The energy sector was up 2.69%, and the energy sector did get a bull breakout today because it did close back over 78, but we are going to have resistance right around 79.5 and the gap fill at 81. Stay bullish as long as we're above 76. So jumping back over to the S&P 500, I still believe this could be a bear trap off of the support zone until we get the next leg higher, where the big bear is going to be waiting at resistance, and that is going to be a very important test in this market. Don't forget, if we break down and close below support, you're getting ready for the pullback. So make sure you're managing your risk and watching these support levels that I give you each and every day, and then just let the price action tell you where we're going from there and be ready to react. We are absolutely crushing this market on the Stocks Channel Discord, and there is a lot of educational content to teach you how to be a better trader, how to follow price action, and how to manage your risk. If you're needing more help or want to join our trading community, you can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.